we're back testing. So, oh, Jesus Christ. We're going to trade as if we're using what's it called? The new strategy. Blah, blah, blah. So we check 4 hour, and the way we determine our bias, we mark high time frame liquidities. 4 hour highs, 4 hour lows, 4 hour fair value gaps. Now, 1 hour, we can mark those for sure. We have this 1 hour low, and that's it. So it's 9 o'clock. Oh, wait. Okay, yeah, so we make the 1 hour high with market open. Okay, and then what do we see? Okay, we make the fair value gap, I believe. Yeah, the 4 hour fair value gap. And then we see which, okay, we took highs, we took both highs. Now what do we need to see? We're going to do two things on this one trade. We're going to wait for our retracement. There's our first retracement. And we've already inversed. And now we've also got a fair value gap that we just made, which I'll mark out. Then we scale down to the 1 minute. And what do we need to see? We need to see a break of structure to the downside or an inverse fair value gap. And then okay, we've inversed. Now we need to see this inverse get visited again, or create a new continuation confluence. For example, we have this breaker block, this fair value gap, which we touch into the breaker block, close out bearish, we can sell a position here, stops, could do above the breaker, or above that high. And we've probably said this is TP1. And that is TP2. Okay. Okay. bang, we hit TP1, meaning we sell half our positions, the majority half if we're in an odd number of positions. So buy back 6 contracts in the sell order, move stops to break even. Final TP, okay. Okay, alright. Interesting. Very, very interesting. Very interesting, guys. Let's... Alright, let's go back to another New York Open. How about the day before? $10. Where are we? Okay. This is the 6 o'clock candle. Hasn't formed yet, so let's just mark out what we see. We've got a 4-hour low and fair value gap there, and then we've got a 4-hour high here. Let me check the hourly. This candle hasn't formed yet, so we've got hourly highs here, hourly lows here, and that's it. We go on the 5-minute. This is market open. Let's take it back. Did we have news on Monday? So if those are hourly highs, I guess they would be final TP, no? Nope. This would be final TP. Okay, we can get rid of this 4-hour high because it's very close to the 1 hour. We're not going to take profits. Take profit twice in the same area. Monday, we had 8:30 news, so news is already out. Market opens, comes down, eats up these lows, fills in this fair value gap here. What do we get? We inverse this fair value gap right here. And now we just need a 5-minute retracement candle, which is right there. We also create a 5-minute fair value gap. Really, really need to pee, you guys. Really need to pee. Give me 1 second. Alright, guys. I don't know if you heard that, but sometimes you just can't have rain without a little thunder. If you know what I mean. Alright, we got that 5-minute retracement. Let's go into the 1-minute. We sort of want 1 minute to break structure to the downside, which it hasn't. There we go. Nope, it hasn't. There we go. 1 minute has broken structure to the downside, and now we want a inverse fair value gap or breaking structure to the upside. So we've got a bearish fair value gap there. We don't inverse it just yet. That could be a stop break or whatever it's called. Alright, maybe interesting. Very interesting. We're in that 4-hour fair value gap still, but we've just pushed deeper and filled it completely. So let's go back to that. Now we want to see a 5-minute inverse. Or break of structure, which we get right here. Okay, and now we need a 5-minute retracement candle, which we get right here, and visit a 5-minute fair value gap. Okay, so now we want that 1 minute. Okay, 1 minute break structure to the downside. Now we want an inverse. Fill that fair value gap again. Is that inverse? It was. Okay, but we didn't get any continuation confluences, so that's a break of structure if I've ever seen one. Bang. Okay, now we've got this 1 minute fair value gap down here. We've got our breaker blocks. What do we see? Reach into the breaker block. Reach into the fair value gap. Fill the fair value gap. Come out bullish. We buy in here. Stops below these lows. TP1 here for sure. TP2. I guess TP3 all the way up there. This one here, because I don't like to have any more than 3 take profits, so let's see what this brings us. We need to double these contracts. Okay, so we're selling 4 contracts at each. Keep an eye on the time because we just bought in at 11:57 and we don't trade past 12, so you know, stopped out. Never mind. I guess we wouldn't be trading past 12 anyway, so let's take profit 1. You know. That seemed to work very well on that first day. So Let's mark out what we've got. We've got 1 hour lows and fair value gap. This candle hasn't formed yet, so we're marking it out as if it's hindsight. It's a 4 hour fair value gap as well. We've got 4 hour highs here. We will mark a 4 hour fair value gap up there just for a further take profit if we need. We have 1 hour highs on the way. We do have this one. Okay, we visit that fair value gap. On market open, no real reaction, no confirmation confluence. We visit again, fill it deeper. There's our break of structure, and we hit all those. So I doubt we're going to go up any further. I mean, yeah, we did take this. We're going to test that other thing that we wanted to test, which was if we can take a trade off the 1 minute time frame. Okay. We push in deep. We inverse and break structure. Fill a fair value gap. Close out bullish. Let's just see. Four-hour highs. 1 hour highs. And was that fair value gap, I believe. That's a 1 to 2, and that's a 1 to 3. Okay. Shit, that's not what we were meant to do. Oh, alright, we're in the trade. Oh. Take out 1 hour highs. We would close 3 positions here. Probably not going to worry about... Shit. Sorry guys, I was meant to... I was meant to buy 1%. Okay. 3 positions here, no, 5 positions here, 4 positions here. We won't worry about that 4 hour high. Okay, so we'd sell 5. Stops to break even. Almost stopped out, that's crazy. Okay. Let's go back to that first trade we had success on and test that if that worked. So, whoa, let's. Oh, we're on fucking. Yes, sorry. Okay. We already know that it's a 4-hour high we're going to sweep, which is these ones. Oh my god, my fucking body's sore. Why? Why is my body sore? Okay, bang, we just broke structure to the downside on the 1 minute. That's taking out 4-hour highs. Now we need to see, this is our breaker block. Right here. Okay, we have also got this fair value gap right here. Touch in, bearish candle out, sell here, stops above liquidity, TP1, TP2. It is NQ, not micros, so this is over leveraging, but you know, it's sort of like a 1 to 4, almost 1 to 3, I'd say. Yeah, pretty much a 1 to 3. TP1 hit. We buy back 1 contract. Almost stopped out. Very close to being stopped out. Okay. Let's try the day before that. I remember then just not being a trade the day before. Got okay, 4-hour liquidity. Just taken at market open. Inverse this fair value gap. Touch into that fair value gap, close out bullish. obvious TP1. And then, Jesus Christ, we'll use the 15-minute for this. Fuck. Let's say TP2 there. Again. Again, we don't, like, we normally do this on micros, so we're over leveraging on this. Let's have a look. TP1 hit, read, sell half position, stops to break even. Okay. Interesting. We're having great success with this. Fuck off. We're having great success with this, which is very, very interesting. Okay, this is what here. Let's just see if we can get 1 minute data. No, we can't. It's fucking August, Jesus. Okay. 6 look perfect. Okay. Yes, we got 1 minute data. Are we in that 6 o'clock? Yes. And this candle hasn't formed yet, so we have 4-hour highs, 4-hour lows. And let's see what market open wants to do. What the fuck? Okay, so we did take these highs. Sorry, I forgot to mark our hourly highs. We don't have any. Okay. So we sort of want to see market hit either of these ranges. Which just doesn't happen. Maybe on ES. Okay, yeah. So On the 4 hour. 4 hour high. 4 hour low. One-hour high. I'll do that as well. And 1 hour low. Okay. So market open takes these hourly highs. We get an inverse fair value gap. Market revisits, creates a fair value gap, touches into the fair value gap, fills it deeper, kind of floats around it. And how I feel about this. And closes bearish out. I'd say sell here. Stops above liquidity. You could have TP1 down here. And TP2 here. Are we gonna have to buy 50 contracts? That's the absolute max. Alright. So we're selling 25 here and 25 here. This is just a 2 to 1. Okay, we hit it, I believe. Guys, very unclear, but I'm pretty sure that hit it. Let's just go to the next candle just in case. Okay, yeah. Yeah, no, I think we hit it. I think we hit it. Which, sorry, let's run that back. Okay, we buy it back, we make 500. Stops at break even, and then we get stopped at break even. So, not quite sure. Jesus. What a move. What a move. Alright. We're going to do one more New York session. Okay, so on the 4 hour we've got a fair value gap here. And on the 1 hour we've got hourly highs, hourly lows. We take out these highs. We've entered that 4 hour fair value gap. Did we inverse? Hard to tell. Now we've inversed for sure. Now we want to see no confluences. Yo! Okay. Break a structure, fill a fair value gap, close out bearish. Holy shit. TP1. TP2 here. And TP3. Selling 5 contracts at each. We see what market wants to do. This is very fucking choppy price action though. What time is this? 10:21. Stopped out. Who the fuck knows? Who knows? We had some luck, but nothing really concrete, you know? So, I'm gonna leave it there.